stocks. And I'm not one of these people who jumps on a YouTube live stream or any kind of medium and is like, I'm a contrarian and trend followers are idiots and it's the only way to be. But I do like to mix both contrarian and trend following tactics into my long-term and short-term trading. And I thought today is as good a time as any to bring up this idea in light of where we're going to end, which is pot stocks. And it has never looked worse for pot stocks since a lot of these companies went public and since they kind of gained a lot of the public conversation around markets. We're going to talk about Apple stock and actually even the 2-year interest rate this year to begin with. But that's where we're going to arrive in terms of picking stocks here. But I mean, everybody should have a good deal of both. We're going to go down the contrarian rabbit hole today. But I mean, your stock portfolio, your options portfolio, your futures portfolio, it should at the end of the day be diversified across buying stuff at lows and buying stuff at highs. I don't think it's necessarily one of these things of like, I am calling myself contrarian and not allowed to do anything that isn't contrarian.
Yeah, you don't want to find yourself into one bucket. I think being receptive to a number of different trading strategies is probably the best way to be. When I first learned about contrarian stock picking in a different term, it's called like value investing, which was, hey, look for stuff that, has, from a fundamental analysis perspective, has some cash, has low debt, has a viable business model, blah, 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 blah. But it's just been beaten up by Wall Street's expectations and analyst ratings. And I think that's kind of the way this conversation can go. In a sense, we're going to look at markets that hopefully aren't, going to go bankrupt, but are just sitting on their butt and maybe are showing some potential upside because they've been beat up in such a way.
Yeah. And I know, I trust me, I've done the work when I was at a wealth management firm. I interned in college, and the whole summer, I'll never forget, was just screening for high price to book ratios, high price to earnings ratios, all these different things for value investing. That's part of it. But I want to get at here today more of like an active way of doing this and less of like a researchy kind of, this thing is a good buy because I screened for it on these bunch of different metrics. I'm going to buy it and hold it forever. I want to introduce just the idea of value or contrarian investing and show how you can actively apply it to a bunch of different markets without having to look up all of that, the price to book and price to earnings ratios. And I want to start with Apple, which is the largest stock on the planet by market capitalization. Mikey, a pretty decent chart here for your iPhones and iPods and everything else, right?
Yeah, it's pretty amazing. I mean, this is this is an adjusted chart, right? It's man.
Yeah, they've split a couple times for sure.
Yeah, it just looks like a rocket ship. I mean, everybody knows this company. Most people have their services in some way or another. It would have been a fantastic investment. Actually, Doc Reckentine, you guys probably know if you're tuning into this or familiar with Tasty Trade, he gifted his nephew shares of Apple stock back in the 90s, like $100 worth. And needless to say, it's been a great return for his family.
And you know what's funny is that man who you reference is one of the last people who would buy something that's up several hundred percentage points. And I'm glad you call out the 90s because you inevitably hear about Dr. Data or Mike Reckentine, who's a great data analyst and has been around markets for decades. Or you hear about, just your family friend who's like, I bought Apple in the 90s. Aren't I a genius? And it's like, yeah, a good call by you for sure. But what both of those people did in the 90s, Mikey, is just see a company that they were like, oh, I could see this company, doing well. I could see as, software is starting to become more important and, building hardware that manages that software is becoming more important. I could see this thing doing well. But guess what? In the 90s, it was a rough go for Apple. Like look at the performance here from 95 to 97. And this company falls from, and this is adjusted, like you say, because there are stock splits and everything else, but essentially falls from 50 cents down to 15 cents, a fall of greater than 50% in the matter of a couple of years here. And I just bring this up because there are so many companies. Actually, every company that is, in the top 5 or top 10 of market capitalization in our equity market today in 2021, at some point in the last several years, has been one of those companies that everyone's like, that thing's done. Like, it's dead. It's down, 60% this year, and it's absolutely over with. And some of those companies do fall from 50 cents to 15 cents and then hover around 5 or 10 cents until they declare bankruptcy or get bought out or what have you. But the upside that you've seen in an entity like this relative to its downside of the last, 15 cents or so is something you cannot scoff at, no matter if the company is Apple or what we're going to talk about today, which is pot stocks. I mean, everybody goes through these periods of like, seemingly the game is over. We had our fun and it's looking really bad here in the 90s for Apple. And some companies, that the best ones that you invest in, the ones that end up performing the best, are ones that are able to pivot and channel that into thousands of percentage points of return.
Yeah, the toughest thing, and you hope that companies can kind of bounce back from a lot of this stuff. And you gotta have an iron stomach to hold.
Exactly.
But it's like, how do I enter this position? I got stuck trying to catch the falling knife in Ford, and of course, when I stopped buying Ford, it started rallying, I guess. And Ford has come off the depths in a similar way to Apple. But it's like, where do you set your line? Where do you draw the line in the sand that says, okay, I'm actually going to buy here and I'm going to continue to hold? It's a tough decision to make.
You almost have to view it in the same way that a lot of people view defined risk options, where it's like, I'm going to sell this call spread. It's $5 wide and the risk is, $300, $400. And if I'm wrong, that $300, $400 is gone. And that's it. With the contrarian way of picking stocks, you kind of have that same mentality of like, I'm buying Apple at 30 cents in the start of 1996. And like, I'm going to buy, a couple hundred, maybe a couple thousand shares at 30 cents there. And if it goes down to zero, like, that's it. I'm not going to sell out of this position for, a 10-cent loser on a couple hundred shares. It's like, at that point, I don't want to sound, like I've got a ton of money, but like at that point, like, is saving the extra 10 or 20 cents of money there really worth the potential upside, which in a lot of these cases is asymmetric? But you're exactly right. Your comment on having to have an iron stomach or in my mind, just like have less care for the conversation that's going on at different media outlets. Because here's the deal. And I know everybody knows this in some way, but just have to reinforce that, like, these media outlets are almost all writing and tweeting and everything else, engaging with you with news and data that's old. And so, like, for you to take some of the information that comes out about a certain asset class or a certain stock or whatever, and be like, oh, this person who's condemning this stock or this asset class to death, they know the future. It's like, no, they've just seen that this thing has gone a lot lower, and they're saying, hey, this thing that's moved lower is bad. And you have to kind of get that out of your mind and just be like, I'm going to pick up this thing on some of its worst days and try to ride it higher. That's true contrarianism. And I always feel for people who are like, man, I wish I bought Apple back in the 90s. And it's like, dude, there are Apples out there right now. The problem is it takes a lot for you to psychologically get over, like, I'm going to lay out some cash across a bunch of different bets here. And all of those bets right now in 2021 look freaking awful. Like, everybody is condemning them because otherwise, if everybody was like, hey, pot stocks are going to be huge in 2022, they'd be up, Yeah. So like,
you're too late.
It's psychological, like, you have to get over it. And another version of this, that I think actually we successfully got over earlier this year. And even in 2020, we were early to this, was the idea of like short-term interest rates were at zero. And the pandemic is, in full force in mid 2020 and the end of 2020. And it starts to lighten up and people are still like, oh, well, they're not going to budge these rates. They're staying at zero. And all the rhetoric, the Fed comes out and is like, oh, yeah, we're staying at zero for the foreseeable future. And then all the analysts come out afterwards and they're like, oh, yeah, they're not moving these things at all. And we're sitting here long 2-year yields saying like, yeah, this might not happen next month or 2 months from now or 3 months from now, but it's at zero. The most negative sentiment that could be out there is out there, aside from the US going negative, literally negative on interest rates. It's as bad as it can get. And so we're going to pick these things up. And inevitably, this market's up over 500% this year. And yeah, we had to deal with plenty of days where people were like, you idiots are buying short-term yields like that. That market's stuck at zero. Like they're not moving them. The Fed is going to, print free money forever. And everybody comes out and says these things until they stop. And this market's up huge, Mikey.
Yeah. And I would imagine like some of the people who said, rates are going negative, blah, 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 blah. Now today are saying, of course they're at 50 basis points, right? How could they possibly go negative? They've never gone negative in the history of the U.S. economic policy. But yeah, I mean, it definitely, we're speaking about it, looking at the data today. It's much harder to have that mindset when you're watching Apple stock, fall to 15 cents or interest rates hug the zero lower bound. But I guess that is kind of what it means to be a contrarian, is to filter what news is kind of coming in and form your own opinion on a market, and one that is differing from mass media or the mainstream.
Absolutely right. It's extremely, extremely difficult. It's the most central idea to contrarian trading, not in picking stocks, but in kind of like active trading in general, is selling the put option into a stock market down move. Because that's when the market is crashing and every single news item is like negative, 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 negative. And you're hearing about your buddy, oh, he's selling out of all of his stocks. Oh, your friend, she's trying to figure out how to get her money in her 401k out of stock investment. And you're like, oh man, this stuff is really, really bad. Selling that put into that fear, into the VIX being, at 50 or 60 or 70 is extremely hard. It's extremely hard to go against the kind of common, the consensus idea at the time. But it is what, at the end of the day, is going to yield you those multiples. It's a lot of people think the same thing of crypto here, where it's like, man, if you're buying this thing at these highs here, you might be kind of late to it. I would have loved to obviously buy Bitcoin 7-8 years ago. And it's like, well, 7-8 years ago, people were like, oh yeah, no one's ever going to use this stuff. And so it's hard. You got to get over it, and you got to stay small and stay kind of try to lay out those contrarian bets across, at least 4 or 5 different avenues. Because 2, 3, 4 of them probably aren't going to hit. Like pot stocks, are they the next Apple? Almost absolutely not. But they do appear to have less downside than upside here. And it's something similar as well. And of course, this is sponsored by the Small Exchange. So we love to talk about, the S420 contract. It's all the way down to, I think, all-time lows here today, $7.50 only cost you. And that's $750 notionally of pot stock exposure. It costs you about $100 or $200 to trade. I've been, in there looking at just piling up every leg lower 1 or 2 of these contracts, thinking that cannabis as an idea, as a product here in the US and abroad, I don't think it's fully going away. And that would be taking this thing down to zero. Now, could it go down to $5 or $4? Sure. But I'd rather be picking this thing up when people are talking about its demise than picking it up when people were talking about how it's the next big thing and it's lost some of that luster. And it's the same thing for, a lot of the Chinese stocks like Alibaba and these other markets that right now it looks really bad. And of course, there's some real meat to how it's really bad. But when stuff is really bad, that's often the best time to pick it up, Mikey.
Yeah, because when when things are going really well, you have Tilray reaching $400 or whatever it was a few years back. Of course, everyone's saying, yeah, look at the use cases for marijuana and medicinal purposes, blah blah blah, is going to be huge. The hemp out of it, whatever. But actually stepping in when the media is saying this industry is dying, blah 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 blah, whatever it is, filter the facts. But you really nailed it on one point, which was you're not always going to be right. But if you're going to stay small, it's at least getting some exposure to it. If you are right, it's a pretty. This product in general is one of the smallest offered by the small exchange. It's a pretty affordable way to take a calculated risk on a market that actually kind of has been growing in general over the last few years, and it's so much more than paper trading. You're actually going to get real feel for a market. I think it's a great way to do it with the S420 futures.
Yeah, absolutely, man. Like, because here's the thing, like, could pot stocks be the next Apple? Like, yeah, they could. Like, the idea is that no one freaking knows what's going to be the next Apple. But I'd rather if I buy 5 or 6 things, maybe some cannabis stocks, maybe some of these Chinese stocks that are really beat up, and find a couple other sectors here in 2021 that are just like really, really beaten up. And they're all, just for the sake of conversation where we started with Apple, they're all, 20, 30, 40 cents. If I buy 5 or 6 of those, Mikey, and one of them sees the growth, sees even a quarter of the growth of Apple, it's going to way more than make up for my losses in those other sectors. So stay small, diversify across these different contrarian picks. But I mean, the way to do this stuff, you do have to kind of find the stuff that people are just absolutely bashing, annihilating in the public sphere. That's the best way to pick stocks from a contrarian point of view. I think we covered a good amount of ground today. Friday afternoon, we're not doing a lot of like high speed, active trading stuff, but contrarian way to pick stocks. I think that's a solid one, Mikey.
Yeah, you can make a day trading strategy if you want. Pick a few of the bounces there. Like we were looking at dollars, a few months back, getting crushed, just playing small bounces in there. Maybe you do the same thing with cannabis, but also an interesting way to form an investment thesis. So good stuff.
Yeah, I mean, look at crude oil, dude. Like as recently as 3 or 4 weeks ago, crude oil's above $80, and everyone's like, "Oh, this thing's taken off to 100." And last week, around Thanksgiving, crude oil is bottoming out to $62, and people are like, "Oh, the pandemic is back in full force. Negative crude oil." And it's like that stuff happens once ever in a while, but it really, there is something to get on the other side of just like this crazy rhetoric all the time, right?
Not that it's an indicator, but I am kicking myself. It's like I see the Wall Street Journal headline when crude oil is at like $85. It's like, option call buying of the 120 strike hits record as hedge funds are optimistic on crude oil. It's like, oh man, I should have sold this thing.
Sell all the 120 calls in crude oil. Yeah. But anyways, man, thanks so much for joining me. We got to get out of here because Pete Momat is waiting to get on to splash into futures. Friday afternoon, some wonkiness in the market coming from some data releases that we don't necessarily care about, but we do care about all the price action and the opportunity around it. Interest rates, foreign exchange, some stocks, a lot of stuff moving here. So stick around for Splash into Futures coming up next. And thanks for watching Small Stakes, everybody. Peace.